for NVIDIA. And an earnings alert. We're going to hear from Boeing, JetBlue, and General Motors this morning. And we'll bring you a first on CNBC interview with GM CEO Mary Barra. Plus, hours after Scott Bessent was confirmed as Treasury Secretary, President Trump throwing cold water on. We'll see. We'll break it all down. It is Tuesday, January 28th, 2025, and Squawk Box begins right now.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Andrew Ross Sorkin. Joe is out sick today. Let's take a look at what's been happening with U.S. equity futures. At this hour, it's a prettier picture than it was yesterday at this time when you saw the NASDAQ indicated off by over 1,000 points. This morning, there's a little bit of a bounce back, but emphasis on little there. NASDAQ is actually indicated up by about 150 points. The Dow is up by 40, the S&P up by 25, and it does come after a very volatile day for the markets. Yesterday, the Dow actually closed higher by 289 points. The S&P was down by about 1.5%, and the NASDAQ was down by just over 3%. Again, the carnage was much less than it was at this time yesterday at the opening, or even before the opening, but you did have the biggest drop you'd seen for the NASDAQ only since about December 18th. NVIDIA was the big loser after concerns about the ability of China's DeepSeek to develop a cheap and effective artificial intelligence model without using NVIDIA's most advanced chips. Still some questions about how exactly that works, what's behind the scenes. But that stock was down nearly 17%. It wiped out $600 billion in market cap, and that is the biggest one-day drop for a U.S. company in history. Broadcom and Oracle also tumbling yesterday. You can see there Oracle was down by more than 13%. Broadcom down by more than 17%. As for the gainers, Salesforce was up by 4%. Apple was up by more than 3%. Again, it was seen as a winner potentially because it had not spent a lot of effort and CapEx getting involved with some of these ways of going about AI. Take a look at what's been happening with Treasury yields. We do have an FOMC meeting that begins today. The Fed's going to be considering whether or not to cut rates. The 10-year ahead of that has picked up a little bit from where we were yesterday. Now we're at 456. Yesterday you saw this entire flee to quality, and that's why Treasury bids were down yesterday. The 2-year this morning, though, is at 422. And then if you check out Bitcoin, which yesterday at this time was off by about 7%, it's back up above 100,000, up by about 2% to $102,798.
Meantime, President Trump weighing in on DeepSeek last night at a meeting of the House Republicans in Miami. Here's what he had to say.
The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser focused on competing to win because we have the greatest scientists in the world.
Trump saying that he considered the low-cost model to be, quote, very much a positive development for AI overall because instead of spending billions, you will spend to reach the same solution. You'll spend less to reach the same solution. And Trump saying he still expects U.S. tech companies to dominate AI. Separately, DeepSeek saying it was hit with a large-scale cyber attack yesterday and was temporarily limiting user registrations. I should also just point out two tweets that I thought were interesting. One was Sam Altman overnight, writing, DeepSeek's R1 is an impressive model, particularly around what they're able to deliver for the price. Right. But we will obviously deliver much better models, he writes. And also, it's legit invigorating to have a new competitor. We will pull up some releases, which I also imagine means we're going to be seeing releases sooner. Yeah. Now, there's a secondary issue because I want to read you a tweet from Joshua Kushner. Joshua Kushner, of course, runs Thrive Capital, one of the largest venture capital firms, and most importantly, the biggest investor in OpenAI, who you would think has the most at stake here when it comes to all of this. And he says, these pro-America technologists openly supporting a Chinese model that was trained off of leading U.S. frontier models. By the way, I'll interpret that, which is to say there's a view that a lot of this was built on the back, potentially, of Llama
stolen from,
potentially OpenAI and other things, with chips that likely violate export controls and, according to their own terms of service, take U.S. customer data back to China. And he has one of these emojis that look like I'm looking up in the air. Anyway, I just think it's worth thinking about this morning as we're sort of contemplating everything that's happening here. It's not to say this may be a Sputnik moment. It may be stolen. All of those things may be true and still have a huge impact on the industry.
Yes, look, it's a game changer. You're right. This is going to be a moment they look back at. I think it's no small issue about what you have to hand over to get DeepSeek downloaded. They were talking about it yesterday on Squawk on the Street, that it has access to all of your Gmail once you do this.
I did not have that experience, but maybe that is true. I'm not aware of.
Steve Kovac, I mean, that's what David Faber was talking about yesterday. Steve Kovac was saying that when he signed up, he used his Apple ID because it scrambles your email and some other things that come through. But I think there are some legitimate questions. If you have questions about TikTok, this has to be a whole other exponential layer on what happens, what gets back with it. There is censorship that takes place on this, so it doesn't know, or it won't answer questions, a lot of queries on things that the Chinese government does not want you asking questions on. But again, it is spurring things, it's making people stop and reassess, and there's going to be a huge spurring of innovation as a result, I think.
Now, I may be wrong, so we can talk about this later.
You are wrong.
With your Apple
You're always
ID,
wrong.
You can sign up with your Google ID. That's possible. Apple does scramble it. I don't know if Google scrambles it. But I don't know if you have to provide your entire email account.
That was just what they were talking about on Squawk on the Street.
Very unlikely to me. But
that it would have access to your emails, is what they said. Gmail in particular is what they said with it.
then I have to do more work on it.
Yeah. The Senate voted yesterday to confirm Scott Bessent as Treasury Secretary. That vote was 68 to 29, with 16 Democrats joining all Republicans to confirm Bessent for the post. Last night on Air Force One, President Trump was asked about an FT report that said Bessent prefers a gradual approach to tariffs, starting with a 2.5% universal baseline tariff that would increase over time. I think what the FT was quoting, saying it would go up every month. The president, though, said that he thought that report was mistaken and that a 2.5% tariff would not be acceptable. He'd like to see much higher tariffs. Among Trump's other comments, he was asked by reporters last night if Microsoft is in discussions to buy the U.S. arm of TikTok, and he said yes. He also said that there's a lot of interest in TikTok, but he didn't elaborate further. AI startup Perplexity has submitted a bid for TikTok. Billionaire Frank McCourt made a formal offer earlier this month. Microsoft and Oracle were in the running to acquire TikTok back in 2020 when Trump first pressured ByteDance to sell the property. CNBC is reaching out to Microsoft for comment on the president's remarks that came outside of normal business hours, and I don't believe we have a response to it yet. But it is interesting to see the potential for what was happened. I think President Trump also said that if there wasn't a deal that was put together, that TikTok would go dark.
I am still so fascinated by your comments with the Gmail.
I don't know. This is what they were saying on Squawk on the Street.
Apparently, according to at least a couple of things I'm reading, there's some very strange words in their terms of service about what they're able to pick off your Gmail if you sign up using your Google authentication account, maybe.
Did you do that when you downloaded
I'm now thinking about it. I'm being. This is live TV. I'm thinking through.
You're like, well, wait a second. How did I sign up for this thing?
Yeah, I'm concerned. Anyway, more to come on that.
Yeah.
Apple releasing news you can use, but I want to get to the bottom of that one. Apple releasing some software updates for iPhones and iPads and Macs yesterday that turn on Apple Intelligence by default for users with supported devices. The updates also disable AI summaries for news apps, which have gained a reputation for twisting news notifications to display inaccurate facts. I've been having a lot of that. Also, just text messages coming in with the Apple Intelligence telling me that the text message is something just that it isn't. Apple initially rolling out, I shouldn't say not that it isn't, it's just not helpful. I'd like to see the actual message.
Yeah.
Rolling out its AI features by requiring users to opt in at this point, which slowed the pace of adoption. Apple allowed Apple to test new features and ensure it had enough server capacity. Users who wish to turn off these AI features can still do so. You can do it in the Settings app.
Google said yesterday that it will change the name of the Gulf of Mexico to the Gulf of America in Google Maps after the Trump administration updates its official government sources. It will also start using the name Mount McKinley for the mountain in Alaska that's currently called Denali. In a post
Denali?
Google
What the
said that it has a long-standing practice of
the
applying
hell?
name changes when they have been updated in official government sources. Google said the name Gulf of Mexico would remain displayed for users in Mexico. Users in other countries will see both names. All right, things that make you go,
Pretty much where I'm at right now. I'm still working on the Gmail and on Josh Kushner's.
So Josh Kushner's itself, right? Yeah.
That's the emoji of the morning.
All right, when we come back, we've got reaction to yesterday's sell-off in tech stocks. Plus, we will get you ready for a flood of big tech reports that are coming later this week. You can see across the board there. Boeing, Lockheed Martin, Microsoft, Norfolk Southern, UPS, Caterpillar, Intel, Visa, Apple, ExxonMobil and Chevron both reporting on Friday. And later, Senator Ted Cruz will chair a hearing this morning on the Panama Canal. He will join us ahead of that hearing, live from Washington, D.C. Squawk Box will be right back. All right, on today's Squawk Planner, the Federal Reserve kicks off a two-day policy meeting with an interest rate decision that is due tomorrow afternoon. On the data front, we'll be getting the latest durable goods numbers at 8:30 a.m. Eastern Time. We'll also get Case-Shiller home prices at 9 a.m. Then on the earnings front, we'll be hearing from General Motors, Boeing, JetBlue, and Lockheed Martin, all of that coming before the opening bell. In fact, GM CEO Mary Barra will be joining us at 7:30 a.m. Eastern Time, first on CNBC to talk about her earnings. Boeing CEO Kelly Ortberg will be on Squawk on the Street. That's coming up at 9 a.m. Eastern in a CNBC exclusive interview. And the CEO of JetBlue will be on Money Movers at 11:45 a.m. That is another CNBC exclusive. After today's closing bell, we'll be getting quarterly results from Starbucks. So we're in it. Here's earnings season. Bring it on. The futures this morning, ahead of all of this, are looking a little bit better. Dow futures up by 48, the S&P futures up by 28, and the NASDAQ, which was down sharply yesterday, a drop of more than 3%, is indicated up by about 160 points this morning. Those tech stocks yesterday at this hour were down significantly. We were talking about the NASDAQ down by 1,000 points in the pre-market at this hour. We want to bring in a guest to talk a little bit more about this. Joanne Feeney is partner and portfolio manager at Advisors Capital Management. And Joanne, the sell-off that we saw in the tech stocks, was that a buying opportunity for you, particularly in names like NVIDIA or Broadcom? What did you think?
Yeah, good morning, Becky. You know, we're longtime investors. We already have pretty decent-sized positions in both Broadcom, which we've owned actually for 10 years, and also NVIDIA. So the news out yesterday obviously started a lot of people, but it doesn't fundamentally change our view. In the long term, AI demands and applications are going to continue to drive the demand for compute power. And we can get into the details of why, because it sounds a little counterintuitive given what we heard yesterday.
All right, why?
Yeah, so, you know, it's pretty obvious that these guys have come up with a more efficient model, and because it's open source, people are right now, you know, checking the veracity of the efficiency of the training part of it, but also the inference part.
Yeah.
And if they've come up with something that really is more efficient, terrific. Imagine all the new applications that will be able to spring out of something like that. But the chip guys, NVIDIA in particular, really took it on the nose yesterday, including Broadcom. And the question there becomes, if you're Amazon, if you're Microsoft, and all of a sudden you have a more efficient model, are you going to, you know, take your foot off the accelerator and say, okay, I guess I'm done. I don't need to spend all that money. In the meantime, Microsoft across the street is now taking advantage of it, buying all those GPUs and delivering something even better. So one has to look beyond the obvious to the competitive forces between the AI providers, OpenAI, Amazon, Microsoft, to really figure out how much they're going to spend. And there's great analogies from the past on this.
If you think that it's game on, then a decline of 17% must have been a big buying opportunity. Did you put more money to work in either shares of NVIDIA or Broadcom yesterday?
No, we didn't. You know, one has to put that in context, though, right? I mean, we got a lot of questions from clients about this. When you look at the year-over-year performance, I mean, NVIDIA was still up 88%, something like that. Broadcom up over 60%. And so, you know, there's a little bit of a pullback, a little being a lot when it's a company as big. Yeah, when it's a company
the biggest
as big as
market cap evaporation
Yeah.
in history in one day.
Exactly. I mean, when you're that big, you know, disruptions in risk in the future, right? An increase in risk, which clearly this is, will cause multiples to contract. Reductions in potential growth forecasts will cause the stock to fall. But one has to think back to history. I mean, imagine you're in the 1980s, 1990s. Intel has come out with a better CPU. Per bit, you know, computation costs went down for decades. Did people buy fewer Intel chips because they said, oh, I got all the computing power I need? No, they kept buying more. So even as the cost per compute went down, the demand continued to rise. And we'll see that.
But this gets to the question of valuation for this stock. Did you think it was overvalued 2 days ago? Did you think this was a situation, or did the situation change to say, okay, maybe there's not going to be such a stranglehold, and NVIDIA being the only company that can actually deliver on that or not? Because if you didn't think that had changed somewhat, I would think a 17% off would be a great buying opportunity, unless you thought it was overvalued to begin with.
No, we didn't think it was overvalued. We did recognize, though, that there's an awful lot of growth embedded. And what yesterday taught us is that expectations can change suddenly when a new piece of innovation comes out, when new information comes out. But if you're a long-term investor, you know, you don't move on that necessarily. And we already had a full-size position. We didn't want to add to it. And that also speaks to the importance of building, you know, client portfolios that are diversified. And so that's what we try to do here at ACM. But one of the things I think people should recognize now is that we're going to see a lot more information come out about this, and more importantly, we're going to see how the companies using these and developing these AI models react. Remember, NVIDIA still is the only game in town, right? We're going to see some new chips from AMD, but if you want the best, most powerful compute power, you still have to go to NVIDIA. Now you have a more efficient model to run on that more impressive compute power. It doesn't mean you're going to back away and say, well, I guess I won't use it all, or I guess I won't take the most advantage of it. So it doesn't change.
I understand your argument entirely. I would just think if you're really committed to that argument, you would see yesterday as a buying opportunity and put more capital to work. Did you buy anything yesterday, or is this a wait and see moment to try and figure out how this is all going to shake out?
Yeah, so I think for an investor who wasn't already fully exposed to NVIDIA or Broadcom, it was a fantastic buying opportunity. But there was still a lot more of an uncertainty associated with it, so I can see why people might be reluctant. Again, we have full-size positions. We've owned these companies for a long time. We're used to riding out bumps in the road like the one we had experienced yesterday.
Got it. Is there anything that looks more attractive to you? Like yesterday, the conventional wisdom was a company like Apple might do well. It was up more than 3% on this. Has it changed the game for any other players? And I guess, how do you assess this? How do you sit down and figure out what kind of shifts do we want to make in the long-term portfolio?
Yeah, so if this proves to be really a big change in efficiency, right, then it's going to make a lot more applications that much more powerful. And so one looks to those that want to use those applications or the software guys. And we've seen software really be underappreciated over the last couple of years. So that's a real opportunity, whether it's a ServiceNow or something else, potentially. So that's a place to look.
Joanne, why do you say that?
Well, so initially, right, what we're going to see either is cheaper development and deployment of these AI models. And so a company that is making use of AI models to improve their products, they're going to be able to make better, faster, more powerful innovations. So their products are going to become more useful, and that should boost their revenues and sales.
Got it. Hey, Joanne, thank you for talking this through with us this morning. As you continue to assess us, let us know what you're thinking on things.
You bet. Thanks, Becky.
Thank you.
Okay, we got a lot more coming up on Squawk Box this morning. Energy stocks among yesterday's biggest losers. Also on the back of this news, given new questions about how much energy will necessarily be needed. Brian Sullivan, our energy expert, is going to join us next on whether the sell-off was overblown or in the right. We'll see. And then later, we're going to talk to MSNBC's Chris Hayes. He's got this new book out about political division in America, social media, and how it's impacted all of us. And have an interesting conversation about technology and what's going on in everybody's head. Squawk Box coming right back after this.
CNBC.
Time now for today's Executive Edge, and we are now focusing on energy stocks this morning. Of course, they got just tortured yesterday on the back of this DeepSeek news and big new questions about just how much energy is required to power all these chips if maybe you don't need as many powerful chips. Brian Sullivan joining us right now on the Squawk Newsline with his take. What do you make of this?
Well, good morning, by the way. I mean, listen, here's the reality. I'm down in Florida giving a talk, and all anybody wanted to talk about is whether or not this was, to Becky's earlier point, a buying opportunity. Here's what I wanted to chime in with. We're going to wait and see what these companies announce or say about capital spending. If they decide that people are going to spend less money on energy, or they're going to need less natural gas on energy to power these data centers, then the sell-off yesterday, I don't want to say the word justified because the market is what it is, but that's going to be the key tell. Now, right now, this morning, Vistra Energy, GE Vernova, Constellation Energy, the names that lost 20, 25, 29% of their value yesterday, Andrew, they are recovering a little bit. They're up 3 and 4%. Not a lot. But if you take yesterday's sell-off on a Vistra or a Constellation, Evercore ISI put out a great note late yesterday, because it's still early, saying sell first, learn later, and noting that with these price declines, the valuations have now gone back to November of 2023 levels, wiping out all of the AI-led gains. That's pretty dramatic. Sell now, learn later.
I mean, we'll have the answer to that.
I think you asked, as always, Becky, the right question. If Satya Nadella of Microsoft comes out and says, good morning, by the way, if he comes out and says, we're going to spend $60 billion, not $80 billion, and that fewer money, less money is going to some of these energy companies to make less chips,